gonna actually kick off straight away with the pound, right? So data for the GDP estimate was just out, and you can see just looking at these numbers that it's not looking that good. Um, so the histogram here shows you the quarter-on-quarter growth, and the yellow line shows you the annual growth. Now, as you can see, you can still have a decent growth, and actual growth here on an annual basis actually was rather high, but on a quarterly basis, we just had our first contraction for a very long time. The last time we had a contraction was in 2012 in the fourth quarter. If you have two quarterly contractions in a row, you're in what we call a technical recession. I guess they call it a technical recession, but that doesn't necessarily have to mean that you are seeing like a lot of people losing their jobs and so on and so on. If you look at a country like Germany, they pretty much have zero growth since last year, and that's that. But and that's obviously a bit different. And I mean, it's no growth really. I mean, no growth. I think a lot of people, have experienced no growth in salaries and things like that in the past. So no growth doesn't have to mean anything. The problem becomes when people start to lose their jobs, right? When colleagues lose their jobs, and when your friend lose your jobs, and then eventually maybe you lose your own job. So, and then that's when you are like in a recession, like a severe recession. Because the labor market is actually doing rather good, and wage growth is doing rather good as well. Wage growth is nearing almost 4% annualized. So what's happening here, though, is that the manufacturing sector is under a lot of pressure because of upcoming Brexit. So what they did is that just a few months ago, they stockpiled. So they bought in a lot of pieces and parts that they needed to complete their cars, their engines, and whatnot. And now they've stockpiled. And now what needs to happen, of course, is that you need to see someone buying all these goods, and production, at least the way it looks like it actually drops. And I'll send you this link. You can read up on it afterwards. Now, the way the market works around these numbers is that the first thing it's doing is trying to adjust the pound lower. The idea is that if the pound is weaker, then maybe people will buy more of UK produced goods, especially if there are tariffs introduced and things like that. It's a little bit like what's going on in China, right? You have the US imposing tariffs on Chinese imports, and by having a lower exchange rate for the Americans that want to buy Chinese goods, if the price of what thing you're buying is going down, then when you put that tariff on top, then it's sort of rather neutralized, and that's what we're seeing here. Now, technically, we've been trading sideways here for quite some time, and obviously the market is not trying to attack this level here from August 1st. And as you probably guessed, there's some decent amount of stop loss orders, so there should have been stop loss orders down here. So if we break below here, I do think we can probably trade slightly lower. Maybe gonna try to trade to 120. Just need to be careful, because it could be the market slides and then quickly bounces upwards. But you need to remember this: if we have like a 1 hour or 30-minute close here, then most likely this is gonna be the new important level, and that's gonna be what people are gonna be navigating from. So it might go down and then up, but then when we go up again, people probably gonna be short selling with stops here. Now, we are not there yet, but again, the macroeconomics do suggest that maybe we're gonna trade lower because of this disappointing figure. So I think we could potentially trade lower, and again, you need to be a bit careful because it go down and up, and then probably do something like this. But that's first when we take out this level, not right now. Right now, as you can see, the buyers are stepping in and they're supporting the price. So when is the time to turn bullish? Well, from a scalping short-term perspective, one could potentially turn bullish on a break to 122.11. If you take that level out, we could potentially drift upwards to 123, maybe 123.50. But then what's going to happen is that I think up here, the longer term traders are still going to be interested to short, right? People that didn't sell up here, people that have a long term view on the situation were probably short up here. For the pound to get out of this mess and start to aggressively trade upwards, we need to take out something like 125.23 as a minimum. We need to take out these important levels. Until that happens, this is going to be under pressure. And things are not looking that much better, unfortunately, because you see what's happening is that there's talks that maybe Boris Johnson is going to suggest an election, general election, and to avoid having MPs being able to block the no-deal Brexit. Because no-deal Brexit right now is in law. So by October 31st, we'll have that. Unless, of course, MPs step up and vote against it. And I think that looks like the most likely scenario now. So until that is resolved, unfortunately, people will continue to sell the pound and we'll continue to see lower prices here. Again, 120 is an interesting level. Then you got 119.47, which is that longer term level that we talked about. Since we're trading pretty much around 126, we talked about the break here. And that is also the 2016 low. Now below the 2016 low, you have, well, the next actual major level is the 105.09 level. I know that might sound a bit weird, but euro dollar is trading, has been trading at 105. So why wouldn't the pound also be able to reach those levels? Let's see what happens. Just pay attention, break here, trigger stops, and then probably down. But it should be a bit messy. All right, Euro versus the USD. All right, so it continues to drift lower into in the following pattern, and I just put some lines up here. They don't really mean anything. I don't trade on the back of these lines. Maybe I should be trading on the back of these lines because maybe they could have helped us. I think it's quite clear, though, in general, that the market is going lower. In the short term, though, since April this year, the price is pretty much trading sideways between 110.28 and 114.10. And yes, I think we'll drift lower, but I'm not really sure how to trade this. And in fact, there's no real need to trade this. There's other stuff to trade. I mean, the last really good trade we talked about was GBPUSD. And then, I don't know how you traded it, but there were some good opportunities in stock markets and stuff like that. And I've been trading some other stuff as well. So we don't have to trade this one because this one is not going anywhere fast. Dollar yen. Dollar yen is just around the lows, right? So this is 105.46. We're dealing with a downtrend. So if we try to trade below this level, that should not come as any surprise for any of you guys, I hope. As well, because of the situation in the world economy, trade wars, whatnot. You know, more people are more keen on selling rather than buying. Now, so trade below here, we might trigger a few stops, might trade a little bit lower, but my preference remain to short sell around these levels up here, so around 107.20. Next market, gold prices. Gold prices as well, we talked about buying here if you wanted to for this to go upwards. I didn't buy myself, as you know, because of the risk reward ratio. Traded other stuff instead. And here, looking at this, I'm still waiting. I do think we could potentially buy at one point, but we need a corrective move, 50% at least of this latest move. If it doesn't, it might actually go upwards. And that's the thing with trends, right? I'm confident that we're gonna head upwards, but I'm not always sure I'm gonna get the best entry, right? And that is the challenge. And I can just tell you that this somewhere down here is probably a good entry. That's all I can tell you. And it's important that when we're dealing with financial markets, and I know you guys know this very well, but a lot of people that are new to the market, they don't understand probabilities. Like in the markets in general, it's difficult because this is like the weather, sort of, if not worse. Why? Because the markets are made up by people like you and me that trade the markets, and as humans, as you know, we don't always take the best decisions, right? Not only that, we're dealing with incomplete information. So everybody sort of know what's going on, but at the same time, we don't know what's going on. No one knows exactly what's happening. And the problem is that we like humans sometimes are going to look at something and going to have a positive spin on that, and sometimes we're going to have a negative spin on that. And then when you add money to the mix, it just becomes more exaggerated, because you might have the best case, but you're not comfortable holding risk. If you can't deal with the stress, you might close your position, even though you did your research and you genuinely think the price is going to go upwards, right? All of that makes financial forecasting really, really difficult. And that is why when I trade, I always trade with a stop. And the reason for talking so much about this is that actually a gentleman contacted me, and he's been short, and I think he's short from, I think, 1,400. And yeah, I think the market will probably go down at one point, but when is it going to happen? I have no idea. Only thing I know that it probably will head higher. And I also only know that about here the risk reward ratio is good, but that's about it. You can apply things like this, like the RSI in the bottom or so. Sometimes they work, sometimes they don't, but that's not good enough, right? So if you're trading with real money, you can't just work like that. So there are certain things that are certain though: stop levels, risk reward ratios, and that's what we can control. So in these situations, and how much risk per trade, right? And I can tell you this: it's very unprofessional to let any trade or so harm you too much. It's always good to take losses. I take losses all the time. It's no fun, but because I'm taking losses, I'm profitable in my trading. Let's move along here. Crude oil prices. So crude oil prices are bouncing from support, right? This is the June low, and this is the West Texas. And I think it can go up to 54 or something like that. Obviously, it was under a lot of pressure, and I think though that we'll probably continue to trade sideways, because you see what's happening is that OPEC is trying to organize, OPEC Plus by the way, trying to organize something to cause crude oil prices to slide. Now OPEC is not necessarily optimizing West Texas crude oil prices, rather they're focusing on something like Brent crude. And in the case of Brent crude, we had a decent slide here from July 30th. From 65 we slid all the way down to 55.93. And of course, if stock markets start to tumble and we go much lower, then probably, yeah, well, we'll see crude oil prices trade lower. And this can be interpreted like some sort of a descending triangle to some extent. Maybe not the best quality, but you definitely have that important level here. And again, we can't really do too much, but we can control our actions. So we can clearly see that we're dealing with a downtrend. And in a downtrend, you rather want to be selling than buying. You can put something like a fib from the high to the low, and you get these 3 fib levels, and that gives you an estimate where people might be looking to sell. What else? You can look at support that probably is going to turn into resistance. So around 59.42, people will probably try to sell. If they don't try to sell here, they're probably going to try 60.55, if not a little bit higher. But we shouldn't really go much higher if this is a genuine downtrend. So my general idea here, it looks like we're going to go up, and then maybe from here, people might look to sell. And if you look at these numbers, well, if we short here with a stop here, we're going to potentially risk 291 cents per contract, and we could potentially make 528 points per contract. So that's a 1.81 times risk reward ratio. If the market sort of slides all the way down to the low, which wouldn't be unsurprising given this pattern, then your potential risk reward ratio is 3.19. So that's the only thing we can control. Try to find good setups like that that make sense, and just do several of them. Do 100 a year, 120 a year, and that's when you start to see the results. Moving along here then, let's take a look at stock markets, and we're going to take a look at the S&P 500. So this is the S&P. So the market here is pretty much at the highs here almost. So this is the prime time to book profits, okay? This could easily go slightly upwards, but we just need to be realistic here. People will probably be very hesitant to buy up here, okay? If we take out the high, then yeah, we'll be on the other side of this upward sloping trend line as well. So that is interesting. However, I personally think probably gonna go up, stress a bit, and then probably go down again. And unfortunately, because it's summertime and everything, I suspect we could probably continue to trade sideways between 27 29 and 30.24. So I think that the preference would be to maybe buy, but buy down at the lows. I think that would be a better option, and then maybe target these highs here. If you're really like bearish and aggressively bearish, you could potentially short sell up here, or you can just focus on something else like the dollar yen, which when the stock market declines does very well. So the idea would be is up here, rolls over, dollar yen will go tumbling. German DAX has managed to bottom out here. So you can see how the market went down, up, down, and then traded sideways and then took out that level. And I have a suspicion, I'm not sure 100%, but I have a suspicion it could potentially trade upwards. I had some trades on the Swiss stock market a few days ago. And you can, always when I'm looking at something, so you want to buy something, right? If you didn't catch it in the S&P or the Dow Jones, then you can always try to catch it somewhere else. So you could have tried to catch it here. Obviously, not much has actually happened here in the German DAX, even though I think it can go down, and I still think it's going to continue to go upwards. I think this whole move here was a false move, and as long as it trade above 11,558, then I would remain bullish. But I can just explain to you what I did. So this is the Swiss stock market. So in the Swiss stock market, and this is your 6-hour chart, you can see how, you know, the market reached these levels, and I actually had a stop loss down here, and I didn't manage to get everything right, but I bought down here all the way up, booked 50%, and then when it went down to break even, I got out. And then I decided to actually buy here again, but then it was by the end of the day and I didn't really feel for it, so I said, okay, I'm not sure about it. So I actually closed out. So I actually missed on this leg here, but I got a bit of money on this move here. And it's like that many times. The reason the way I wanted to show you this is that there are other markets. Like, why did I trade this one compared with the German DAX? Well, you see here we're creating higher and higher lows. So we're clearly in an uptrend, right? And if you pay attention to the big picture, you know, this is your weekly chart. And you can see that on the weekly, we had a significant break here on April 15th. And that itself, this could be like a cup and handle if you wanted to look at it like that. If not, this an ascending triangle, if you link it up like that. Let's do the ascending triangle because that gives you less than an aggressive target. And that's just, we can go all the way up there. So you have that, and then you have that little uptrend here. You don't have that in the German DAX. In the German DAX, you have a very, very sluggish, I mean, you had a decent uptrend like that, but since here, you know, it hasn't lost momentum really. So you just need to be sort of selective in what you trade. And stock markets in general, guys, they're all highly correlated. Most of them are highly correlated. There's not a big difference. S&P, Dow Jones. You have the Nasdaq, which sometimes can do a little bit of its own thing, and you have the Russell 2000, which can sometimes do a little bit of its own thing. But German companies or the German DAX, S&P 500, I know they are overall different, but at the same time, at least in the short term, there's always a bit of correlation between them. So Swiss stock market, I mean, the first time I traded it was now recently. I think I never traded before, but a chart is a chart, and as long as what you're investing in or trading in makes a little bit of sense, then a chart is a chart, and you can just trade it accordingly. Doesn't matter what it says on the label up here. Okay, let's see if you guys have any questions. So we have Goldie here, by the way. Good morning to you, sir. Abu Bakar, good morning. And we have Nikos. I hope you're doing well. Marvin as well, and Rada, and Keith Jones. Alex, not cup of tea, but how about Euro Pound for a reversal? Let's take a look at Euro Pound. So this is the Euro Pound, and so let's just, I did an analysis on that. I put that on the page. And as well, before I forget, did you guys know we're now on Telegram? I'm gonna send you that Telegram link. Just give me a second. because obviously I want you to keep tabs on what we're doing here. So we are both on Twitter and on Telegram. So that is Telegram, and here is Twitter. Okay, yes, so euro pound. So the way I'm looking at this is that I'm treating this section here like some sort of a rectangle, and I'm treating this like a false move. So, and I'm ignoring this. That gives me the difference between these two levels is 478 pips. And the break to the upside here probably opened up for a rally to 95.82. And we're so close to the 2017 high. When we come so close to these levels, they become like magnets. The market will just want to go up there, and it will try to, anyone with stop losses just above that 2017 high will probably the market's going to try to trigger those. And then if possible, it's going to overshoot a bit, and then maybe it'll come down. But we need to understand the macro fundamental, like the longer term outlook here, the risks here are real. I know people, I know an American businessman, CEO, like since that referendum, if not even before that, he's always hedging his income in pound, and he's short some big sizes. Just in rollover, he's making, I think he told me, make like about £5,500 just on rollover. Not per day, by the way. I think it was like more than a year. So people are genuinely, I think, trying to hedge to what may come. Because unfortunately, the way it looks like this. Look. Bit of economics now. So, depending on how you look at it, per the IMF, GDP euro area is 18.75, and the UK is at 2.8. So, by leaving, I'm not sure if this is included here. If it is, we just need to remove 2.8 from here, right? So from that perspective, what's happening here is that the UK is leaving pretty much one of the world's biggest markets, or biggest country almost. The fact that it's becoming a bit of a country, the European Union, is obviously one of the reasons why people want to leave, and which makes sense, you know, people want to govern themselves. But from a purely economical perspective, it's a rather big loss, especially for UK companies, because UK companies, they have some very good technology and skills, especially in the service sector, as we know, like Goldman Sachs and Morgan Stanley, all these guys, American by the way, but also like our own banks, they didn't go out in Europe and set up an office in Germany and France and stuff like that. Rather, what they did, they set up a desk in Canary Wharf in the city of London, and then they hired people to from these countries that will do their job. And it's the same, like the law and everything, legal system and everything. I'm gonna lose out to that. Maybe, hopefully, you know, there's talks that they can do some good deals with the U.S. And if they get a very good deal with the U.S., then that could potentially compensate. But again, it's a bit different. You know, you can get on the Eurostar, and like 2.5 hours later, you're in central Paris. If you're gonna go to the U.S., you need to take a plane. So it's a bit different, but maybe if they get some good from deal, that could compensate a bit. We'll see what happens, but I think from that perspective, purely economically, unfortunately, it's going to be a bit of a loss. You might even, from your own brokers now, if your broker does not have a license in mainland Europe, they might not be able to sell to mainland Europe. To give you an idea. So what happens is that now they need to move resources from England to set it up in Europe. Cyprus, most likely. So resources that could have been spent here and tax income that could be collected here Not unfortunately, it depends on how you look at it, but will be collected elsewhere. Anyway, that's what the market is doing here. They're seeing that risks, what we're talking about. And right now, the market's mind is only about that risk. It can't see that maybe 6 years from now, 7 years from now, we might get a good deal. And that's why we'll bear the fruits of a good deal. That would make it better. And that's why people are selling. Now, again, as I said before, probably that 2017 high, I think it will try to go up there. It's just sort of the market. The market loves to sniff out these stops. And it's just part of the pound. The pound always does something like that, by the way. So I think it's going to probably try to go upwards and then probably go higher. Now, if you want to put a position on here, so we have this low here now at 91.03, and that level here. These are your fibs, right? So this is also nicely interesting. 1, 2, 3, 4 highs at the same level, and you have this little line like this. And I think if we do take out this level like that, we could potentially go upwards like that. To really start to talk about a reversal, you probably need to take out 90.85. So that will be one scenario, not my preferred scenario, by the way, guys. The pound in general, try to buy it on breakouts at these situations. You can be caught up at the wrong level. I think my preference would have been to maybe look for a pullback, maybe to the third fib or 91.50. I think that looks far more reasonable. So maybe from these levels, try to turn bullish. And then the idea is just to align ourselves with the trend, which we're doing. We're aligning ourselves with the major economic narrative, and we have the risk-reward ratio in place as well. So if we just head up to the same high, you make 1.39 times the money. If we actually reach the 2017 high, you make 2.21. And if we reach that aggressive target up here, then you make 6.25. So that's what I would have done here. Okay, let's see if it makes sense. Telegram working well. Awesome. That's good. I'm going to try to share as well the video here. I'm not sharing it too much on Telegram. I haven't even started yet. We just started. And I think once in a while you might actually even hear my voice on Telegram. So make sure you join. It's very straightforward. You get messages as soon as we post anything on the site. Okay, I think we're going to wrap things up. Guys, thanks so much for watching. Don't forget as well to like the video. You just click here. And you just click on that little button here. Okay, I think we're going to wrap things up. Guys, thanks so much for watching. Don't forget as well to like the video. You just click here. Subscribe to the channel. And you just click on that little button here. Okay, I think we're going to wrap things up. Guys, thanks so much for watching. And don't forget as well to like the video. You just click here. Subscribe to the channel. And you just click on that little button here. Okay, I think we're going to wrap things up. It's way better than the average. I think about 30% of you that subscribe also have the little bell button on, which is apparently way above the average. So you're doing that really good. And the reason for doing that, I think about 30, if you do that, you will be able to subscribe also have the little bell button on. You will get a notification when I go way above the average. So you're doing that really good. And the reason for doing that, I think about 30, if you do that, another way of being able to subscribe also have the little bell button. Send out the video. You will get a notification when I go way above the average. I do also have good. And the reason for doing that, I think about 30, if you do that, another way of being able to subscribe also send out the video. That will get a notification way above the average. I do also have good. And the reason for doing that, I think about 30, if you do that, another way of being able to subscribe also send out that will get a notification way above the average. I do also have good. And the reason for doing that, I think about 30, if you do that, another way of being able to subscribe also send out that will get a notification way above the average. I do also have good. And the reason for doing that, I think about 30, if you do that, another way of being able to subscribe also send out that will get a notification way above the average. I do also have good. And one reason for doing that, I think about 30, if you do that, another way of being able to subscribe also send out